Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka, and my colleague.
Hello there, I'm Yatin Mota.
Yatin, the markets were fairly lackluster. After a positive start, we failed to hold on to those gains and we slipped into the red. In fact, it's the second straight day of losses coming in for the Nifty. Below that 25,150 mark, that's where we ended. Although the markets were lackluster, I don't think our mood should be lackluster given the fact that we are approaching the weekend and one more trading session to go for the weekend to come.
And the market breadth was not that bad, Nandita.
Yeah,
so,
of course.
Since the morning, the markets were trading on a positive bias. I think Reliance and, one or two stocks in the IT space were here and there. But I think the broader markets were, showing strength.
Yeah, traction in broader end of the markets. In fact, the small caps were shining bright today. 1% gain coming in for the Nifty small cap index. Advanced decline ratio, as you mentioned, breadth was in favor of gainers. So 3:2, that was the NSE advanced decline ratio. Banks held out today. No big gains coming in, but marginally in the green, the Nifty bank index. IT metals, these were among the sectoral gainers today. But on the flip side, FMCG index was in the red and so was the pharma pack. Yesterday, both these indices came to our rescue, but today, some bit of profit taking there. But Reliance Industries in focus, Yatin, board has approved bonus issue in the ratio of 1:1. That was much awaited today and that decision has come out. In terms of individual movers, Titan was shining bright in a lackluster market. 3% gain coming in there. LTI, Mindtree, Wipro, some of the IT counters doing well. Even though the FMCG index was down, ITC up almost 1% or thereabouts, 511. That's where ITC ended. Hero Moto, Hindalco, Tata Steel, HCL Tech, all these IT and metal names on the gaining end. On the flip side, Cipla was a big laggard today. Top Nifty loser, Reliance Industries, Dr. Reddy's, Coal India, Britannia, Nestle, some of these FMCG names and pharma names as well as Reliance Industries and some auto names as well. Tata Motors and Bajaj Auto under pressure. But as you mentioned, the mood was pretty upbeat for the broader end of the markets. You had some stocks that are high flyers and reacting to brokerage notes as well, right? Yeah. I think Zomato was one of them, up somewhere around 5 to 6% or thereabouts. But Yatin, take us through some of the other movers.
So today, Premier Energy is the stock which got listed yesterday, saw 20% upper circuit, ended almost at 18% higher. So, that is one stock we need to focus on. Raymond Lifestyle also listed, much higher than the street expectations because, post the demerger, I think the people are expecting in listing anywhere between 2,000 to 2,500. In fact, the stock settled close to 2,800 odd after listing at 3,000. So, good moves coming in there. In the Nifty 500, we have stocks like Gujarat Fluorochem. That stock moved 11% in trade. UTI AMC continues to move 7% higher for that stock. KC International also witnessing a 6% kind of move. What was not doing well is Prestige Estates, some profit taking after the QIP. Stock was down 5%. Mazgaon Dock, Oil India, Philip Carbon. All of these stocks which were at 52-week highs witnessing some profit taking in trade. But broadly, good session for stocks like Zomato, that was up 5%. Stocks like Chola Holding, Fortis, PPL Pharma, Syngene, witnessing 3-4% kind of a moves and stocks trading now at 52-week highs.
All right. Another stock, as Yatin also mentioned, was Chola Investment.
Yeah.
That also hit a fresh lifetime high today, given the fact that Goldman Sachs has come out with an upbeat report on the stock. In fact, they have initiated a buy call with a target price of 1,786, which implies a 20% upside potential. In fact, Goldman Sachs believes that market share gains amid the commercial retail upcycle is one of the key reasons why they have come out with this report. And scale up of the non-vehicle finance business as well as, in fact, it should actually reduce the cyclicality and it should also improve the earnings visibility for the company going forward. The brokerage is expecting the company to deliver an earnings per share compounded annual growth rate of over 33%. Over FY24 to FY27. In fact, it also expects the return on asset profile to improve by 24 basis points or thereabouts. And it believes that the company may deliver robust loan growth driven by market share gains across its product segments. And it believes that the company has the capacity in place to, for new businesses, in fact, to diversify its loan book as well. In terms of its quarterly performance, Yatin, it was pretty good. The first quarter profit was up somewhere around 30%. Even in terms of AUM, assets under management, it grew somewhere around 40% on a YOY basis. And, disbursements were also pretty good in excess of 20%. And across verticals, right, vehicle finance, loan against property, home loans, all of these segments saw good disbursements in the first quarter. And if you look at the stock, it's up 25% in the last 3 months and a 45% up move in the last 6 months. And not just that, of course, the stock hit a fresh high today, and Goldman Sachs is expecting a 20% upside potential for the stock here on 1786. That's the kind of target Goldman has on this particular stock.
And Chola, it comes from the Murugappa group, good corporate governance standards, and one of the South-based NBFC, which has seen very solid growth coming in. But from NBFC segment moving to the aviation space, wherein worries for SpiceJet keep mounting. Obviously, it is said that the company is on a roadshow to raise funds. But we have company and brokerages like HSBC which believes that you need to reduce your positions in SpiceJet. Target has been cut to 26 rupees from the previous target of 40 rupees. Now in the aviation space, we have seen Indigo trade at record levels, good momentum, good earnings, but SpiceJet hasn't been able to perform in terms of quarterly numbers. In fact, HSBC is of the view that the company, if they do a good size QIP, that will still go into wiping off the previous losses and the kind of debt which is sitting on the balance sheet. In fact, the company is planned to use 3,000 crores of QIP money will be used to fund losses and working capital, given the fact that the fleet expansion is not in place. In fact, with huge debt and 3% market share, valuation for SpiceJet seem to be too expensive as per HSBC, and they say that to revive its business from such low levels, it is a key question, whether or not they can turn around the operations moving ahead. So SpiceJet, that stock is in focus. We've seen a lot of run up in the stock, and 26 rupees the target price is much lower than the current market price, more than half the current market price. So yes, HSBC clearly signaling some red flags with respect to SpiceJet and the plans to raise funds.
Right, flying into turbulence, SpiceJet for quite some time now, question mark over its turnaround as well. But now it's time to smell the coffee, Yatin. Given the fact that the next stock on my list is CCL Products. Now, this stock was up somewhere around 15% yesterday. Today, of course, we saw some bit of profit taking coming in. Stock was down somewhere around 5% or thereabouts. But the company has retained its volume guidance despite a spike in coffee prices, right? Arabica coffee, that hit a 13-year high. So that is a cause of concern because it is, the coffee prices or elevated coffee prices could erode margins for these coffee manufacturers, right? So, but the company was, or the management was on CNBC TV 18 today, and they've said that there has been no change in the consumption pattern despite a spike in coffee prices. Volume guidance has been retained at 10 to 20%. The company has maintained that it has not seen any impact on of high coffee prices on the margins as they work on cost plus model, which is a model where they add a certain percentage to the cost price to arrive at the selling price. So in that sense, their margins have not been impacted. Clients have been shortening the contract cycle from 1 year to a couple of months. That is a pain point because working capital has also been stretched because of higher coffee prices, and they have not been able to predict volumes as such because of the shortening of a contract cycle as well. But EBITDA per kg remains stable at 105 rupees as of now. That's what the management has said, and they have not changed any or made any changes to the EBITDA guidance for full year as well. Top line growth has been predicted at 20 to 30% by the company for this year, and all in all the guidance has been left unchanged. Even though coffee prices have been spiking, the company is well poised to weather that because of their cost plus model that they use, and stock price has been up 28% in the last 1 month. As I mentioned yesterday itself, it rallied somewhere around 15%. Although the shortening of the contract cycle is something that I think the company will have to tide over. But as of now, management has said even though coffee prices are at multi-year highs, everything is fine for the company.
Absolutely, and I think they clearly work on that cost plus basis. So the coffee prices do not matter, but yes, in uptrend usually
and also
the company
I think it's more about in-house coffee that they make, right? And in-house consumption, for in-house consumption, a rise in coffee prices doesn't really, this much rise in coffee prices doesn't really make a difference. It's out-of-home consumption is where you feel the pinch of higher coffee prices.
Absolutely, and we are still living in that food inflation era, wherein be it any emerging market or developing market, the prices of coffee, cocoa, rubber, all of these essential natural commodities have seen uptick.
All right, then those were all the stocks that were on our radar this afternoon. But with that, we are ending the day, of course, on the back foot. A lot of employment data expected from the US. So global landscape will remain a little volatile, and we will be taking stock of that as well. So the markets will be reacting to the initial jobless claims data that will come out in the US tonight. So let's see how that pans out and how we react to it tomorrow morning. But with that, it's a goodbye from me and Yatin. Thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates.